Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets. If you enjoy these videos or the channel, just leave us a like, a subscription. Those small gestures go a long way. So as the title suggests, I wanted to make a slightly different type of video and sort of look forward more than I usually do and talk about the best case scenario for BTC and also the worst case scenario for BTC from current levels. Now, by definition, these are the outlier scenarios. They're not my base case and in general far less likely to happen because they are extreme, but still worth being aware of because this market does all sorts of weird stuff all the time, as we learned last year. So let's start with the best case scenario, kind of outlier bullish, before we go to the outlier bearish. So the outlier bullish scenario is as follows. And again, these are somewhat grounded in reality and reason. I'm not just going to say, well, the outlier bullish scenario is that Bitcoin immediately becomes the world reserve currency of everyone and everything, and so it goes to 1 million. Okay, fine, that's okay, but not useful or even entertaining. So we're going to make this sort of technical oriented and see where we end up. As far as that positive scenario goes, I think it would take one form of the following. Essentially, by definition, 15k has to be the bottom in this type of scenario. FTX blows up, etc. It all looks like doom and gloom, and from that, the phoenix rises, if you will. Now, going forward, how would that continue to develop? Well, at the moment, we are at the top of the range at 25k. And then the target for a lot of traders as far as the breakout from this consolidation is 32k, which is, as you can see, that previous range before the big breakdown. So essentially, the market's been consolidating between the summer range of 19 and 20k, where we had FTX implosion deviation that got reclaimed, and then the next kind of range boundary from a higher time frame point of view, should we break out here, is at 32k. Now, one other bit of context to add, we have a range low and a range high here. If you look at 30k range low, where is the range high? I think we could just go to basically 60k. That's our range low, and our range high is there, and we can do something similar for the consolidation we're currently in. So, outlier positive view is essentially that the FTX blow up from a technical point of view was the deviation. We've now reclaimed that and we're not going back. So we've that's our bottom. The deviation wasn't accepted below those range boundaries. And then we're going to have a breakout from the upper range boundary, which is usually how really bullish ranges resolve, right? You have no acceptance at the range low and a breakout and have acceptance at the range high, and that gives you your continuation. And also, given how long we've been in this consolidation in terms of weeks, I mean, that's 30 weeks. That's a very long time. The longer the consolidation, the bigger the impulse that follows once the market actually decides to break from balance and stick there, as opposed to resulting in a deviation. So quite reasonably, a lot of traders are saying if this breakout sticks, at least we'll get to sort of 29, 30k, the other range. Now, this is where the outlier bullish part comes in. What if we just get some version of what we had within this consolidation back into the old consolidation? So essentially, while everyone's targeting 30k as resistance on a breakout, and again, it's a two-step process because we have neither yet. We don't at the moment have a super clear breakout, nor do we have the market trading at this level to make the determination as to whether it will be resistance or not. However, what if the following transpires? We do get the breakout from this range, it continues and meets its high time frame target, but instead of finding resistance at 32k, it simply reclaims it, right? Now, it might not be on the first test, you might get a spike and a bit of a reaction, some sort of structure form, but eventually ends up reclaiming and finding acceptance back above 32k. Well then, from a purely kind of range level-to-level point of view, if the range low gets reclaimed, then your target for that becomes the range midpoint, and then eventually the range high. So this outlier bullish case essentially has that this was the absolute bottom. This consolidation is our kind of bear market into bull market reaccumulation phase. It's going to break out, and that breakout, given the magnitude of the consolidation, is going to reach the previous support turn resistance at 32k, but then instead of finding resistance there, or even after finding short-term resistance there, it will ultimately resolve in a reclaim of that range low, and then logically speaking, from boundary to boundary, that takes us to 45k, and then eventually, in one form or another, the highs at 60k. So that's how that would go. As far as the outlier bearish case, what that would look like, I think essentially it would mean that the market tops in one form or another before even getting. I mean, obviously, like, look, you could take a medium case where the market finds resistance there, and then we just spend eternity ranging between sort of 30 and 20. Fine, but we are going for extreme scenarios here by definition. So the extreme scenario would be the market failing where it is right now. So essentially, if we look on the weekly time frame, highest weekly close, etc., everyone's targeting 30k. Also, that's just not true. Whenever someone says everyone, a lot of the time they're just projecting their own views onto the market. So be weary of that type of language, or be wary rather. However, let's say that the market finds resistance here and then just starts to fail. Well, what we have at that point, and for a moment we will jump onto the higher time frames. If we look at the yearly, this is when you know we're getting into saucy territory. Most of these years, even if you go on Coinbase or Bitstamp, something with a bit more price history, most Bitcoin trading years have a notable wick to the downside. Even the bullish years have a wick. This year, we don't have a visible wick on the high time frame so far, and so for that reason, we can simply mark out a couple of levels. The first is the yearly open, which is where you would expect the market to trade if this yearly is going to have a wick, and then the all-important retest level, or the support a lot of people were talking about, myself included, at 12 to 14k based on prior candle structure. So we're just going to type that as high time frame support resistance. Now, if we go to the weekly, what the outlier bearish scenario would look like is essentially the market is still within the same range. We have summer lows at 20k, and then we have those same highs at 24, 25k, and essentially just like at the range low, we had a breakout that wasn't accepted. We're going to have something similar at the range high, a break that doesn't get accepted. Now, whether that's a spike and a reverse or a close above, weak consolidation reverse, in one form or another, just like this impulse didn't stick, the argument would be that the impulse at the range high isn't going to stick either. And then, instead of just finding support at some sort of higher low retest level or whatever, just like the market didn't find much resistance until the range high having reclaimed the range low, the argument would be the market isn't going to find support from the range high all the way to the range low. At that point, all the bullish higher low type of areas will have failed, and the market ultimately retraces back to the yearly open, having left the higher time frame support resistance level untested, and fills that in. So that would be the outlier bearish case. Just some food for thought and interesting stuff to consider. Again, markets aren't always so sort of drastic with outlier cases coming to fruition, but given that this has been an attempt to sort of make it somewhat grounded in reality, given we are using high time frame levels and price action that's not too insane, it's worth having these tail cases in the back of your mind so you don't lose your shirt completely if they come to fruition. I think also from a higher time frame or even macro point of view, essentially everyone needs to be wrong about macro for the bearish scenario to be true, and I feel sort of similar for the bullish scenario. So on the bearish one, it would have to be that, inflation isn't coming down, it's going to rear back up and be really ugly, and we have another leg essentially, and significant downside continuation in risk assets and repricing on the back of this bounce, new lows in equities, and crypto to follow to some extent. And I think also that would have to be, at this point, given how many actors we washed out in 2022, it would have to be accompanied by fresh FUD. So essentially selling from legacy as a result of a second leg higher in inflation, and also more crypto native toxic flow, for lack of a better term, which would have to be something to do with the existing exchanges, ETH as a security, stablecoin regulation, fiat on-ramp, something really, really ugly in tandem, so at the same time or along with all the macro completely flopping, that would have to all come to fruition at the same time in order to facilitate this type of scenario. Most likely, or at least that would certainly improve the odds of that taking place. Yeah, I think that's all I wanted to talk about for this video. Just some interesting thought experiments. If you thought this was complete garbage, let me know in the comments, and I'll never do it again. But I just thought it might be fun to just chat and kind of have a conversation like you would have with your mates at the pub. I wouldn't know. I don't have mates, and I don't go to the pub. But presumably, you just talk about outlier price action scenarios. If not, then I wouldn't want to hang out with you anyway. That's a joke, somewhat. Now, as far as what we have at the moment, it's kind of still the same. We're at this weekly resistance, having spiked the top of the consolidation. So nothing too crazy yet. There isn't enough evidence to suggest that it's like a super clear breakout at the moment. It looks good. What I don't want to see is essentially the market get stuck here, because the best breakouts are the ones that move quickly. You have really aggressive buyers, sellers get run over completely, market makers just aren't quoting anywhere near as much because the buying and the spread, the sort of flow is so toxic that no one wants to hold all of that short inventory, and the market just teleports higher as a result of very aggressive buyers, shorts covering, liquidations, thin books, all of that stuff in tandem, and the market just runs away. So that would be cool. What I don't want to see is basically an attempt at a breakout in terms of structure, and then for the market to just consolidate and do nothing, because that doesn't convey the type of urgency that I want to see when I'm looking for a breakout. So I think if this continues to be garbage, choppy price action for more than a week, or kind of headed into later this week and the end of this week, I would start to become skeptical about it. And there's nothing, I think, wrong with putting a time limit essentially on these types of moves, because again, the best breakouts don't give you 10 trillion entries before actually moving. So bear that in mind. I think the probability of a successful breakdown, what am I saying? Let's try this again. The probability of a successful breakout is reduced over time. Monday is fine. I think there's some legacy President's Day low volatility nonsense going on. But I think if this starts to extend into the end of this week and into next week, I'll be certainly skeptical about this price action. It would start to look a bit distribution-y to me as opposed to continuation. So that's BTC, something you'll have to monitor on lower time frames, or at least on the daily time frame. What I don't want to see from here is, if the market is strong, there is no real reason to be losing the pre-impulse candle. So this kind of red cluster that was formed before the breakout, if we start losing that for any reason, that just wouldn't look like the type of price action that you want to see on a range high breakout and retest. It should be fast, it should be efficient, it should be aggressive, shouldn't be losing supports, and shouldn't even really be going sideways for long periods of time. Hopefully that makes sense. I think something very similar for ETH. If we look on the daily time frame, we had our first daily close through the monthly range high at sort of 1700. So that's the monthly level, and then on the daily, we're starting to finally close above it. So as long as we're there, it's okay. But I would add the same caveat to ETH as I did for BTC, which is that if it's going to be a real breakout, it should move rather quickly and aggressively. The longer it takes, the lower the probability that it's going to be compelling as a breakout, and the odds of it being a distribution-y trap type of nonsense increase the longer the market takes. And again, even in terms of technical levels, if the market is strong, there's no real reason for it to start closing back below this pre-breakout consolidation, because then that just looks like distribution or just a lack of acceptance through the range high. And then we just have to trade it as a range, where range high, monthly, sort of 1700. Range low, at least on the daily time frame, which is what we're using to visualize it, at 1500. If this doesn't go and falls back within, then you sort of look at the midpoint and then the range low as usual. So essentially, thematically for this week, the market is very close to breaking out, but that tends to be a very dangerous spot. If there is going to be a breakout, it has to be sort of sooner rather than later, for lack of a better term, and I would be on guard if it doesn't develop during the course of this week. So there's a time component to it, and in terms of technicals, the first red flag would be losing these pre-breakout clusters, sort of 1600-ish on ETH, and sort of 23.5, 24-ish on BTC. That's all from me. If you enjoyed the little thought experiment, leave a like, leave a comment. I'm interested in your feedback. We did get the actual technicals done as well. And as always, newsletter this week, trletter.com, Donstream, Altcoin Thursday to mark the Pico top, and all that good stuff. We are grateful for your support on the channel. And yeah, I'm going to shut up. Hope you all had an excellent weekend, and see you later in the week. Bye-bye.